want to share this. Meeting is being recorded. The host. Okay. I wanted to share this one example. This book, it compares real estate and stocks and talks about an even investment and different ROIs, and then how you can get tax deductions from real estate. And it's better off if you invest the same amount on an average deduction percentage from your depreciation on whatever real estate property you get.
That's the thing, man. See, I need to come up with a visual aid for this. You know, I'm going to talk about that as the first thing we talk about right when it starts. I'm going to hold that thought.
What's that?
Well, I can't spoil the surprise, silly.
Okay, I'm sorry.
So for reasons I'll never understand, I can't share this to Small Town Success directly. So I'll have to share it.
I'll share it too. Share it in my personal and the group. I think I hit one of those life lows, you know.
How so?
Lately. There's just so many things been slapping me in the face. The in-laws kind of like swapped up on me. My girlfriend's parents are getting a divorce, and now the mom and the grandma, which is the instigator, is kind of putting me in the middle of it.
Really?
And, oh yeah, I don't even know how I did that. So that's happening, and then just getting so tired of work. I'm just in one of those ruts right now. Also trying to get back to the gym too. Ain't really working.
Yeah, it's tough, man. When you see what your life can be, and then you see what it is, and like how much farther it is, like you have to go, it's tough. It is tough, but it also is an opportunity for inspiration. It's like, my life can be that, so I can go shoot for that, and I'm not stuck here. Like, at least there's a way out. It's like, it may take me 2 weeks, it may take me 20 years, but at least I know where I'm going. And that's helped me a lot.
Yeah.
All right. You ready to go?
Yep.
All right. Let's do this. Leroy Jenkins. Leroy Jenkins. I have no idea if that actually, I don't know if we went live before or after that, but it's okay. Leroy Jenkins. I ain't scared.
I think we are live.
All right. And I'm seeing it's got captions on it, and it totally said Leroy Jenkins. That's awesome.
Awesome.
Yeah. All right. Well, you ready to get started?
Yeah, let's get it.
All right. What's up, everybody? Scott with Kingdom Gold here with my friend, homie, former student, teammate, business partner, and all around good guy, Bryce. Mr. Bryce, welcome aboard again. I'm actually glad you guys can thank Bryce for this. I'm actually glad that you decided to, because I let Bryce pick the topic for tonight. I'm glad you picked this topic because it's a good one. We're in the correct season for the tax topic. And, it's good to know what to do. Bryce and I obviously are not tax professionals or financial advisors, blah, blah, blah. So you can't sue us. Okay. But it's good to know from a business perspective what you can even do. And I'm going to show you like, because my previous video, that's why I have this kind of, it's actually it's a good headset, but it's almost too good because it's making my ears hot because it's so foamy. But anyway, my previous video that I tried to show you guys how I do my expenses organization, apparently my microphone's going out, and nobody decided to tell me
I
you
told you
know
earlier.
that I was having technical difficulties, so I had to break out the headset. But anyway, so I'm going to show you guys how I keep track of expenses and the system that's worked for me. Bryce has a couple things he's going to talk about, so that's kind of, it's going to be I don't like how see how it's like going across me. Maybe I can like put it behind me.
There
See if
you
that
go.
works. Ah, that's even worse now. Okay, we're just going to live with it. Yeah, it's like I'm telling you, whenever you start trying stuff, it means more stuff to break too. You just got to be aware of that. Where's it going? There we go.
You gotta be committed.
That looks terrible. Look, that's right. You gotta be committed. Okay, it's okay. It's all good. All right, Bryce, why don't you tell us what's going on in your world?
Well, tax season, and I never really did my own taxes. My parents, for the first 2 years of me being employed to a full-time job, my parents just did my taxes for me. And so far, so good. I got returns both times. But this year, I am determined, now that I'm trying to start a business, to really focus on how I can set up my deductions and my expenses and my income and all that, and get it all organized for my accountant to do her work for me.
Yeah, awesome.
So I was really motivated this year. I picked up a book. It's Tax-Free Wealth by Tom Wheelwright. He's a former CPA. I think he's actually still a CPA. He's a colleague of Robert Key. I always murder his name, butcher his name. Kiyosaki. Every time I talk about it.
Kiyosaki.
Kiyosaki. Yeah.
It's 3 sounds. Kiyosaki. You just say the first one twice.
Yeah. Well, yeah, it's a good book. I'm about halfway through it, but for the first half so far, it really gives brief descriptions about how you can make the most out of get the most out of the tax code and get the most money back when it comes to filing for taxes.
Yeah, man. Yeah. So what I was going to tell you, I need to do a visual aid for this, because there's a triangle. It's like this. Okay. It's going to make a little triangle. Okay. And I feel like there's hey,
it's on the back of the book.
It's very, very similar concept. Okay. And there's 3 pieces of this triangle. There's cash flow, there's investments, and there's, I guess, expenses management. Sorry.
Yeah.
Sorry. Okay. So, and a lot of people get, they're so focused on expenses management and like taxes and stuff that they tend to neglect investments and cash flow. And like Kingdom Gold's whole mission is to help people with cash flow, help them start businesses, things like that. And then there's the investment side, which, we kind of don't really go on the investment side. We're really on the business creation, income creation, cash flow creation side. So we're like that part of the triangle. And a lot of people, they focus so much on deductions and even investments a little bit, because you got people, they will throw, hundreds of dollars a month, thousands of dollars a month in the stock market. But what they don't realize is that if they don't have the cash flow that can support them when the stock market is down, well, then they're betting their entire security on the stock market. And that, to me, is a big gap right there, right? So to me, it's like you got to get your income first, get that really solid. Then you can start your investments. And then while you're doing those things, you can do the tax part in parallel. So tonight, we're talking about that very important part, which is the taxes, expenses management thing. And we're going to have a little bit of a lesson with me tonight of I kind of went a little bit crazy trying to get tax deductions, but okay, it is what it is. All right. So Bryce, I'm going to start off with this because I was supposed to show you this like 3 months ago. And even before I do that, so don't say starting a business because you've already started. Okay. You are a business owner and want to encourage you with that. Okay. So you're not some,
Yeah.
punk newbie now. You've been in it for a little while and you're you're doing good. So you are a business owner. All right. I'm going to share my screen real quick. And doot. All right. Doesn't want to do that. That's fine. It's cool. Whatever. All right.
Oh, and a tip for all y'all watching: if y'all can't get y'all business filed through GoBiz, find an accountant. They can do it for you. I've tried 12 times already through GoBiz and it never worked.
Really?
Dude, I've been having so much trouble with them.
Really? Okay. See,
I gotta go do my taxes.
For those of you that don't know or might not be in Louisiana, GoBiz is the Secretary of State for Louisiana. That's their web tool to you can file an LLC or a S corp or whatever your business is.
Yeah.
I want to do a video on that. I'm halfway tempted to start another LLC just to do a video, and then maybe I can dissolve it later or something. All right, so I'm going to share my screen here. Oh, there we go. Okay. All right, Bryce, can you see my screen? Excuse me.
Yes.
All right. Hold on, I got a cough coming. All right. So for starters, okay, here's a little bit of the behind the scenes of how Scott does his business stuff. So my company name that I do all this stuff on is Kingdom Gold, right? And then I have all these folders to try to organize my stuff. And you can see here, I've got expenses 2020, 2021, and now 2022. Okay. So I'm going to show you guys kind of how I take care of my receipts, my expenses, how I organize them, things like that. And then we'll move on to what Bryce has to say about stuff he's learned from his tax-free wealth book. So for starters, every CPA is going to be different. Also, definitely get a CPA if you're going to start doing business tax deductions, because they are going to know the rules, regulations, the process, and I guess some of the language, so to speak, that these expenses need to be filed under. And unless you are just really gung-ho into reading up on the tax codes, and you would rather spend time on that versus running your business, I would highly recommend getting a CPA. I think it was $400 for me to file mine last year. But to me, it was $400 very well spent, because now I don't have to worry about, did I do it right? Or am I going to get audited stuff? I have that level of security because I hired a professional. Okay. So let's get that out of the way first. But the biggest thing about taxes and expenses and stuff is you cannot take credit for an expense as if it doesn't exist. Okay. So document everything. Okay. Now, if you go buy, roses for your sweetheart on Valentine's, okay, obviously don't go documenting that. But everything that you buy that is business related, and most of the time we shop online, or if we get a receipt, we can get an email version, things like that. Just do a print to PDF of those receipts you get through your email. Take screenshots, print your Amazon invoices, do whatever you have to do. Okay. But get all of those records for all of the expenses that you have and file them somewhere. Okay. And I'm going to show you my file structure. Obviously, you don't have to do it exactly how I do, but maybe it'll give you some hints. But that was one of the things that my CPA said last year that I thought was really good advice. If it doesn't exist, you have zero shot of it being a write-off. Okay. It's kind of like you miss 100% of the shots you don't take. If you don't even have the receipt or a record of the transaction of the expense, then there's no way it could be it could be counted towards your write-offs. Okay. So what I did here, I have a folder for every month. Okay. And I try to go through here at least once at the end of the month and go do all my receipts. And when you do it that way, it makes it much easier. Because I got behind this year because we moved and had a baby, and I probably spent maybe a total of 12 hours having to reorganize all the stuff and play catch up. So definitely do this at least once a month at the end. Okay. But what I did, I have a folder for every month. Okay. And as you can see, this is organized alphabetically, right? But what you can do, here's a little cheat that I do. All right. If you put a 1 dash or a 2 dash, I mean, I guess you don't even have to do dash, but if you put a 1 in front of the folder name, then it'll organize by number, and then you can put the months in order for that way. Okay. So for example, here's April. Okay. Just do 4 dash. April's kind of a bad example, but look here. So the next month is May, right? And if you want your May expenses right under April, just do this right here. 5 dash, boom. So now I have it in chronological order for the month, and that really helps me when I'm trying to figure out, find the folder and do these things quickly. Okay. And I'm not going to waste time here and do each one of these, but just kind of wanted to show you guys as an example. 6. Okay. So that's how I organize the folders in this way. All right. Now for the receipts themselves. All right. I think this is a super handy way of doing it, and highly recommend some form of this. Okay. What I do is every receipt that I have for that month, I'll put what it is. Okay. And I'll put the month that it is in the file name. So that way I know if it's a January expense and somehow it got into the March folder, I can go put it back in the January folder. Okay. And then I actually put the cost of the expense in the file name of the receipt. And that helps with what I'll show you here in just a second. But doing this with the month and the expense in the file name of the receipt has been extremely helpful for organizing and summarizing stuff like that. Okay. And sometimes February was a little light. Let's just show you. Was it March? Yeah. So March, I had a lot of stuff. Okay. And like I said, I went a little bit crazy. But here we are. Okay. This right here, just kind of showing you some stuff that I do take credit for legally and all that. Okay. This is electricity from a house. Okay. Based upon what square footage of your house that you can that you use exclusively for business, you can take a portion of your household bills and stuff, right? So again, if let the CPA handle that. Okay. Don't discount an expense just because you don't think it will apply. All right. Go ahead, add it to the receipt pile, and you're paying the accountant to basically do the sorting for you. So let them determine whether or not it's an expense. Okay. Some of actually like 97% of the coins that I buy, those are all tax deductible. I label that as advertising. I'll get to that in a minute. In March, I bought this laptop. The laptop that I'm using right now, which for the record, if you're ever doing anything with videos or recording or stuff like that, highly recommend a gaming level laptop, because the processing power and the solid state drive and all just really helps out with that. So here's almost $1,500 that I'm able to write off because I'm using my laptop, obviously, for my business, right? So again, don't discount any expenses, or don't think that they won't apply. If they're even remotely business related, take a capture of it and add it to the receipt pile. Okay. So again, the name, like what it actually is, the month that it came from, and then the cost and the file name. All right. And the reason I put the cost in the file name is because my CPA said that he wanted a summary not necessarily all of the receipts. He said to keep the receipts in case I get audited, stuff like that. But he personally, the way he does it, he just wanted a summary if I have like good categorization. Okay. So here is my summary. Let's do Bryce. How well can you see this? Can you see this reasonably well?
I need glasses. It's
Yeah.
pretty small, but
Yeah, let me get rid of that green.
good news. I got some glasses coming in this week.
Hey, there you go.
Yeah.
All right. Let me see if I can minimize this zoom thing. Okay. So try to zoom in just a little bit. All right. But it also kind of doesn't matter because this is just an example anyway. So the reason that I put the cost of the expense in the file name is because now I can go put the cost into my spreadsheet without having to open up every single PDF in here. Okay. I can just go boom, 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 boom. And it's still a little bit tedious. And I do know that some apps exist that help out with this. But I don't know. I haven't used any yet, and I don't know what to recommend at this time. So here we are.
I got a question, Scott.
Yo.
Have you ever heard of any pre-business deductions?
Pre
Before you get your business established, could you use some receipts maybe in like 1 or 2 months prior to it being established?
So good question. Here's my thoughts on that. I'll let so people can't sue me. I'll have to say this, just take it with a grain of salt. If you don't have to have an LLC to be a business owner, all right, I highly recommend it, but you don't have to have an LLC or some legal entity, quote unquote, to be a business owner. You can, shoot, how do we do it? There we go.
Sole proprietorship.
You can be even a sole proprietorship is a legal entity. Okay. You can just be Scott Paget or Bryce Sanders or whoever you are and still have a business. Okay. So it doesn't have to be a legal entity in order for you to take credit as a business. Rental properties are a really good example of that. Actually, a lot of people don't have an LLC for their rental properties. They just rent out a piece of property that they have, but they can still write off the roof replacements and swapping out countertops or whatever they do for the property because it is a business. Okay. And I think that's one of the common misconceptions. You can have a business. The thing about it is it has to be something you do. Trying to remember the legalese for it. It has to be something you do to with the intent of making a profit. So with the intent of making a profit, okay, that's the key for it. So, I think me personally, I think it's a lot easier to do that if you have an LLC. But there again, if you are buying supplies, if you're getting tools and, you're basically gearing up for the expenses before your legal entity is actually running, well, then heck yeah, those are still business expenses because, hey, guess what? It takes money to file paperwork with the Secretary of State to get your business started, right? So that's still a business expense. So that is definitely applicable for tax write-offs.
Okay. Thank you. That came up with a discussion I had with somebody else, and I wasn't too sure about it.
Yeah, no, absolutely. I guess this is 2 years ago, 1 year ago. I don't know when it was, but yeah, I definitely wrote off some stuff that I had accrued before my LLC. And
okay.
that was, CPA accepted. So, blessed.
Yeah.
All right. So, so just going to go through this real quick. So like my internet, okay, what I pay for my internet, my security system, advertising right here. These are a lot of the coins that I bought. Again, that's one cool thing about 7K or about any business like that is, I get to write off things that are making me wealthy in the long run. So that's pretty cool. My web tools that I use, if you have a website and you have some kind of a monthly charge for that, or things like that, definitely that definitely counts. I got some logos made. Again, here's like my house, home expenses, things like that, cell phone, all that good jazz. So again, capture everything that you can and let the CPA figure it out later. And then, okay, like I said, when you do your receipts and you put the cost of the receipts in the file name, definitely helps out with this part of it. Then you can just add all the ones together and have like a little scratch area for that. But then you can just add all this stuff together, and then holy smokes, where'd all my numbers go? Let's try that again. All right. So then over here is like your total. Okay. And Excel's been a little weird, but if I go add all this up, okay, that is, give or take 50 grand from all the accumulated expenses. And some portion of that, okay, that's what the account is for. Some portion of that is tax deductible. In fact, a lot of it is because last year was a building year for me. Okay. So I did I had a lot of expenses. But even this stuff adds up, like your website, your security, your cell phone, that adds up, and you just keep adding these things up. This is also where rental properties help out a lot. Cause look, I spent almost 10 grand because, my stupid shower decided to crack before I moved out of my rental property. Okay. So, capture everything, and you'll be surprised at the amount that you might be able to write off on your taxes. So yeah, so that's how I do it. There's probably better systems. I know there's apps that will track like every single expense that you accrue. I do plan on
But
getting
you have
that.
to pay for it.
You do have to pay for it. I don't entirely know how much it is per month, but also at the same time, that kind of goes back to your cash flow thing. Okay. When you have cash flow, you can buy tools and accrue expenses that will help you run your business. So I'm still kind of a small operation, right? So this is manageable at the moment, but at some point I know I'm going to have to get something. And whenever that happens, I'll definitely let you guys know.
Yeah.
All right. So Bryce, any other questions on anything like how I'm doing this, or any other ideas or things like that?
Not really. I'm doing the old timey way. I have a couple drawers right here full of receipts, and I have note cards on it, labeling which
There you go.
month, what it is, and it's somewhat organized. It's not just a box of receipts
Yeah.
where
Right.
the CPA has to go through it and organize it. I got
Right.
it pretty.
Yep. A lot
That's
of it too, if you're strategic with how you buy things. So like when I go to Home Depot and I buy some tools for the house, or, some, uh, I had to buy something for my rental property. Okay. They have an option to send an email receipt. And it's like, well, yes, I would like an email receipt, because then, okay, then I already have a digital copy that I can just stick in the folder. Or Amazon. Okay. Everybody shops on Amazon. You can just print out the invoice of that particular item that you buy for your business and then stick it in the folder. So that's really where some of the beauty of Amazon comes in on their side, because they're like, hey, you can either go to the store and get it for $10.99, or you can buy it from us for $10.99. It gets delivered to your door, and you have like an electronic receipt already, and blah blah blah. So that's why they're what, like multi-bajillion-dollar company. But anyway, so yeah, so that's how I do my stuff. Actually, I would kind of like if you guys would comment and or criticize, don't hurt my feelings too bad, but if you have any ideas on how you guys do this, that would actually be pretty awesome to share that.
Yeah, please.
Right. All right, Bryce, why don't you take it away with what you've learned from your book?
Yeah, I wanted to say positive or negative feedback is always helpful. But this
Just don't hurt our
this book,
feelings. We have feelings too, people.
please don't. I'm very sensitive. This book, Tax Free Wealth, written by Tom Wellwright. He's a CPA. Has really helped me out and really just wrapped my head around the tax codes and what it's actually trying to do. So one of the quotes in this book, it goes something like, the tax code is not meant to take all your money. It's actually to guide you to save your money if you read it and follow it correctly.
I like that. I like that a lot, actually.
Here's the 4 quadrants. It's E stands for employee, S is self-employed, business owner, and then investor.
So that is Robert Kiyosaki all over that.
Yep. So on the left side, you have the employee and the self-employed. You mainly pay taxes on those 2 sides, where on the business owner and the investment side, you are able to catch a break and follow the tax code and make you get your refund and you can use it to your advantage, the tax code. So the government wants 2 things mainly from you, is to create jobs and create housing. And that's what business owners and investors are doing. They create jobs and they so real estate investors, they have houses, so have people live in there. It just feeds the economy and builds it up. And that's what the government wants you to do.
Man, what a simple yet very profound statement. Because I don't know if you've heard of the 1031 exchange, but
yeah,
like if you sell a piece of property, you can do a 1031 exchange, which means you can take the proceeds from the property you sell and put it in another piece of property without taxes. So you're kind of deferring the taxes at that point, but that goes in line with what you're saying. Like you're contributing to the building of houses, or housing, I should say, at that point. So that is very profound. How about that?
Yeah, I think I'm pretty sure about the 1031. I mean,
Yeah.
There's strict rules to it where you have to do it within 6 months, and it also has to be an investment greater than what you sold.
Does it have to be greater?
I think so. You can do like 2 smaller properties, but I think I might be wrong, but I'm pretty sure that it has to be more.
Yeah, I'm not quite at that at that level yet. Okay, yeah, it's coming.
Yeah,
but,
yeah, that's the key word. I wanted to share an example in this book. Let me find it right quick. Great book, by the way. I'm only halfway through it. Here it is. So this example is comparing investing $100,000 into the stock market versus investing $100,000 into real estate, getting a rental property. And the average stock, suppose you make a similar investment in the stock market and the return is 10% compared to your 7% in your real estate. It sounds like the 10% return is better, right, in the stock market. Well, you'll have a capital gains tax of 20% taken off of that 10% you get back from your $100,000, which brings it to, where's it at? So you get $10,000 back and then 20%. So that's taking $2,000 off of that. So you get $8,000 total from your investment in the stock market, where from your 7% return in the real estate, you get $7,000 back. Well, due to the magic of depreciation, my bad.
I'm about to say, whoa.
You won't have to. You won't have to pay taxes on your $7,000 that you get back from real estate. You can actually have your depreciation, which your average depreciation percentage is about 27%. And there's something else called tax segregation, where you can, inside a property, you can write off your wooden floors or your walls and your furniture and all that.
Really?
They got into great detail in this book about it. They said it's a greater percentage if you put nail in your floor. So if you have a wooden floor and it's not just like vinyl or anything, you get a higher percentage for that back in cost segregation. So you're 27%.
This is what I was telling you. You got to be a special person to be an accountant, man. Like stuff like that. Oh, that is a laminate floor versus an engineered floor versus a vinyl plank floor, and that is golly, I just can't even imagine.
Yeah. So where am I at? Depreciation of about 27%. That's 27,000. It gives you a tax deduction against your other income of 20,000. So if from your employee income, you got another tax deduction of 20,000 because you already used the 7,000 on your real estate, which you didn't have to pay for and pay taxes on. I mean, and then additional deduction against your other income is worth about 6,000. Yeah, it's not the full 20,000. I'm sorry. You use 30% of that 20,000,
right,
which is 6,000, and you can put that back towards your other income,
right,
which you're at 7,000 plus 6,000 is $13,000 you get from your real estate investment versus your $8,000 from your stock return. Which that right there is mind blowing.
Yeah, well, that to me is, to me that kind of supports my triangle theory. Your cash flow is what gets taxed, right? But if you put that cash flow into something tangible like real estate, you get tax incentives. So that's almost in a way like another stream of cash flow, right? If you're not losing as much. Like there's a popular saying in stock trading, like rule number 1, minimize your losses. So if you minimize the losses that you are incurring from your tax burden, I mean, people don't realize how huge that is. It's not the only thing you should focus on. And some people actually limit themselves because they're like, oh, I can't get a deduction from that, so I'm not going to do it. It's like, yeah, but it'll help you. Like people are just kind of weird about that, right? So don't just depend on tax deductions, but at the same time, be smart, right? Like, let me just say this, because I don't know if there's ever going to be somebody who's like, make the rich pay their fair share type thing. People will always do more per dollar than government ever will, because every part of government has to take their piece of it, right? You got Medicare, you got Social Security, you got this administration, you got that administration, and your dollar just gets diluted so much. That's why we're in so much debt as a nation. But, if you were to get that money in your own hands, you are much more agile, and like the impact you can have per dollar for your community, for whatever cause you believe in, is thousands of times greater than what the government can do. So don't think it's like a noble thing to pay taxes or to pay more taxes. I'm sure the government, if you want to make a donation to the government, I'm sure they would let you. But for the rest of us, okay, we can do a lot more good with our tax money that we would be paying versus the government.
Yeah. And on that point, for anybody watching, I would not, especially at my age, depend on Social Security.
Oh,
no. It will not exist.
No.
If it does, you won't get much out of it at all. And then your 401k, don't depend on it, because I feel like a 401k is just, it's a way of security for people. But when it comes to the age of retirement, you're not going to get back as much as you think.
We ought to do a whole nother video on this, because I could talk for probably at least a solid hour on how the 401k is like the most beneficial scam on the planet. Like,
It depends on the market.
But so
And if your market crashes, then your 401k crashes too.
Maybe scam is the wrong word, but the people that came up with the 401k and got it passed through Congress and stuff like that, they knew exactly what they were doing, and they basically have the hugest cash cow on the planet of the middle class continually feeding the stock market. And they dangle the carrot of, oh, well, you could have $1 million by the time you're 60. Ooh. But whether the markets go up or down or whatever, they get paid by 160 million people, right? Or however many people it is that have 401ks. So definitely get your free money from your company, but also
don't depend on it.
Don't depend on it. Right. That's
other ways. Create a bit. I feel like everybody should have a business.
Absolutely.
Just like for the tax write-offs and all the deductions and the extra income. Everybody needs that extra income, right?
Right. And that's my thing. Like, to me, my focus has shifted entirely. If I had when I'm 65, okay, if I have 17 businesses and each one of those businesses give me 10 grand a year, well, guess what? I'm making 170 grand a year without any investments, without a 401k, without anything. And that's continual, right? If I'm managing these businesses correctly and they last 30, 40, 50 years, I'm getting $170,000 a year relatively passively, just whatever it takes to maintain those businesses. And it's like, so I don't care about the stock market at that point. If the market goes up, the market goes down, I don't have to worry about, well, I have enough in my 401k so I can retire. That's what I'm saying. To me, we have been sold this, I don't even know what you call it, almost like a snake oil, that the 401k is like this magic recipe where, oh, well, you can just go hang out on the weekends. You just work your 40 hours and you just live your life, American dream, blah, blah, blah. But it's like, whenever you start thinking like that, you are, and that was me for years, right? I mean, that's all I knew. That's all I was ever taught. But then, you become an adult, right? And this is why I'm happy for you, because you're still young getting into this. I was like, man, something is just not right. It's like I'm making more money, but my expenses are going up and I just feel like I'm not getting anywhere. And then I had this epiphany, right? Like, I have to do something for me of my own business and grow that without limits, right? Because like with your job, you're only going to get paid so much, right?
Yeah, the word job is an acronym, just over broke. And that's my mindset. Don't just depend on your job, because you're gonna be just over broke.
Right. And that's why I'm so passionate about this, because like you look at the people around you, Bryce, and you think about it. All these people you see around you are all in the same sinking ship of, we're not going to have enough one day. I mean, I just filled up my truck this evening and it was already, almost $100. Whereas, last year it was like 40. I mean, we're already feeling the pinch, and it's not getting any better, especially with the way the government spending is going and the world is going and economy. It's just, we gotta change our strategy. We can't depend on Social Security. We can't just depend on our 401k. We can't just depend on even our own business. We have to do all of these things and multiple of these things. That's 10x rule, guys. I'm telling you. 10x rule.
By doing that, you also give jobs to people in need.
Exactly.
If I have 5 businesses, I can't run all them 5 businesses by myself.
Exactly.
I can barely do one. So I'm gonna have to hire somebody. And that gives them cash in their pocket, maybe a new skill that they learn,
right?
A community that they can learn from and just interact with and get better as a human being.
Right, absolutely.
I feel like there's so many antisocial people out there just want to do their own thing and then come home and just don't really worry about getting any better, which that's, some people are like that, which good for you, but that's not me. I want to better myself every single day of the year. It's go time at a young age.
Absolutely, man. That is 10x. That might be 11x right there, actually.
There's another quote I wanted to share in this book. It goes back to how the tax code is written for reducing your taxes mainly. It's 5% or 0.5% of the tax code is devoted to raising taxes, and the remaining 99.5% exists solely for the purpose of saving you money.
Hmm.
Nobody thinks that. You ask anybody out there with the normal job and the employee, they hate it when they come to tax season. They hate it. They cuss at Uncle Sam every time they see their paycheck because there's so much money getting taken out. Get a business, you make some income, get your deductions, work up to a rental real estate property, and get even better deductions.
Absolutely. Tangible assets, man. And the thing about the 401k, this is a little bit on the conspiracy theory side. So, whatever. Okay, this is my opinion. But 401k contributions are tax deductible, right? Well, what's going to happen when government really gets in a bind? They're going to look at all these billions of dollars in people's 401ks, be like, I think we're going to start taxing that now. And they're going to start taxing it like prematurely, I guess. I really think that's coming. I think they'll hit the 401ks first, and I think they'll hit the Roth IRAs later. But if they're especially in like digital form, stocks, dollars, however you want to call it, yeah, I think probably sooner than we want to. I think they're going to start coming after it. Whereas it's very hard to take people's tangible assets, right? Like, come get my house. Okay, well, you'll have to probably look down the. I don't know how political I should be with this, but you will probably face physical resistance if you try to come take my house, right? Or my rental property, or some of my silver coins
Gold
or
and
whatever.
silver. Yeah,
Yep, gold and
don't
silver.
my gold and silver.
Absolutely. And it's like, okay, that is much easier to defend against than, oh, well, the government has passed this new law overnight that all 401ks must give a 10% tax immediately because of this emergency situation that we've dug ourselves into, and now you have to pay for it. That's the kind of stuff that I want to protect against.
And that's something you can't just like, no, government, that's mine.
Right.
You can't do that.
Right. No doubt,
It's
man.
not in your control.
That's right. But like gold, silver, real estate, like that's my mantra. Gold, silver, real estate. Get tangible assets. Even like I don't know, even if you're into like cars or guns or something, like just stuff real that people value. But gold, silver, and real estate to me are like the most easily accessible and the most practical.
I have a Marine buddy, and he got out, I think, in 2006 or 2007, and then the whole market crash, whatever had happened in 2008. I'm not really sure about what happened. I was only 8 years old then.
Oh,
Yeah. Well.
Oh, Bryce, no.
I'm
Oh,
so sorry, Scott.
oh God. Oh, look, you
Guess
can
what
see my
tangible
bald
asset?
spot as I'm. Oh God, Bryce.
Guess what
Oh,
tangible asset he started investing in? Guns, and a lot of them. I actually traded silver for
did you
guns.
really?
One gun from him. It was a pretty sweet gun.
Nice. What was it?
A 22, but it was like a synthetic stock pistol grip.
Oh, cool.
It's a Ruger 22. It's like one of a kind.
Yeah.
It's nice.
Sweet, man.
And he loved my coins too. It was one of those coins that hit the market. It was a Don't Tread on Me with the rattlesnake.
Yep.
And also Guns Up America. It had a dude, a cowboy hat. I think he had a sheriff star on a sheriff badge on his chest, 2 revolvers like this, and a big Texas state up in the right corner. It was sweet. He loved it. He fell in love.
Sweet.
Man, he didn't regret trading that gun. I got a really
Yeah,
good deal.
no, that's dude. And what you just did, okay, what you just said, Also, for the record, we're in Louisiana. That type of stuff is legal, so nobody can report anybody. Okay. What you just did is what mankind was meant to do. Okay. You have something of value. I have something of value. Here, let's trade. No taxes, no government, this, that, or the other. And that's so cool that you bought a gun with silver. Like
Yeah.
that is so freaking cool. So freaking cool.
Sadly, I had to get rid of that Liberty bill to make it somewhat of an even trade.
Oh yeah.
Yeah.
Still a nice piece. I mean, you had it.
Yeah, yeah. Yeah. He loves it. I think he put it right in the middle of all his guns.
There you go.
Show his other Marine buddies when they come
Right.
over.
Yeah, heck yeah, dude. Yeah, anything tangible, man. I mean, anything that someone else can't just anything that you're not dependent on somebody. Like, that's what kind of scares me a little bit with cryptos. Because at the end of the day, you
They
need
gonna didn't they start taxing cryptos too? Capital gain tax?
I'm kind of getting to that a little bit, because what do you need for cryptos? You need electricity, you need the internet. What does government regulate? Electricity and the internet. Um, Again, anything digital, right? So it's just like 401ks. People can say, the government can say, oh man, we're not getting any taxes on these cryptos, so we're going to pass a law, and overnight all of the companies and all of the wallets, Coinbase, I don't know, whatever all the crypto companies, all of your holders, you must now have this tax. And again, they're not going to tell the government no, right? So it's like, oh, okay, well, there's your tax. Boom, done. Like overnight. You can't do that with a physical asset. And to what you were saying, I know there was some talk about some kind of taxes with cryptos, like taxing them like a stock, but I don't know any details on that. I'm very much a baby when it comes to the crypto stuff.
Me too. I don't really pay attention to it. I know somebody that keeps all his long-term investments in Bitcoin, which, hey, Bitcoin's a really popular thing, but if the market crashes, the government crashes, all that, and it's gone like that. All your life savings, everything gone like that.
Well, and that's what bothers me. I need to do a video about this. That's what bothers me about modern financial advising. They say, oh, well, look at our portfolio, okay, and it's all stocks or bonds or whatever, and that's their idea of diversity. They don't talk about, rental houses or cryptos or gold or, whatever. It's just these section of stocks and bonds that we manage. Like, to me, that is not real diversity. Like, to me, diversity is get your gold and silver, get your guns, get your real estate, get your 401k, get your whatever else, get your cryptos. I don't know if I said cryptos word, but get like these literal different things. And that is true diversity right there. Not just, am I in aggressive stocks or passive stocks? Like the financial advisors that I've talked to, that's literally all they said: aggressive stocks or passive stocks. We'll do 80-20. You're still a young man, you have lots of time, we'll do mostly aggressive. And then, by the time you're 60, it's going to be like, that's not diversity. That's not diversity,
It's
man.
not. That's, you're putting your money into one thing, and the bank's putting a lot of your money into a lot of different stocks and bonds, like you were saying. That's not
Right.
really diverse. Diverse is when, like you said, when you have some money in the stocks and bonds, which I do. I use a financial advisor for that. Real estate. You can also do it yourself for your stocks and bonds, which I started learning it this year. I want to get into it. Your cryptos. I know I'm harping on cryptos, how I would not put long-term investments in it, but I have made
Or at
money
least
with
not
crypto.
all of it. Like
Yeah,
all of it, literally.
millions, man. I couldn't. I'd have to sell off a few million. This dude has, I don't know how much Bitcoin he has, but he has a lot. And dude, you can sell like maybe 2 and put it somewhere else. No, I put all my money in the Bitcoin. Like, good for you,
Like,
man.
I wouldn't put all my money in gold or silver. Like, literally, that's the whole point. That's not diversity. That's not
It's
diversifying your portfolio.
It's not.
Yeah. So this thought just came to me, and I guess we'll wrap it up here in a minute. We've been going on for about an hour, but this thought just came to me. Who are the richest people on the planet? Maybe the richest organization, whatever you want to say that. The banks. The banks are, right. They literally have all the money, right? What do they do? Do you think they just have a few stocks and a little bit of cash and savings? No. What do they do with your money? With your money, Bryce, and with my money, what do they do with it? Guess what? They're buying gold. They're buying silver. Guess what? They're buying foreclosed properties. Guess what? They're generating cash flow by becoming a loan service. Okay.
Yeah.
They own businesses. The banks are doing the exact opposite of what the modern convention for normal people is. The banks are doing what everybody should be doing. And everybody's like, oh, all these rich people are just, they just need to give us their money. It's like, no, we need to start doing what they're doing. If the banks are buying gold and the banks are buying JP Morgan, I think early last year, they bought like 700 million ounces of silver or something like that. It was some kind of ridiculous amount of silver. It's like, well, why are they buying tangible assets? Okay. And what businesses are they invested in? And what stocks are they invested in? And what income streams are they getting from their from the cash that you're giving them? They're making money with your money. Like it's a brilliant system for them, right? But that's the stuff we got to do. We can't just be passive about our financial situation anymore. We got to step up our game.
Scott, what do you know about notes?
About what?
Notes, investing in notes, like notes that cost tens of thousands of dollars. I think it's something to do with real estate. I heard it on a podcast before.
And I've never heard that. As far as real estate?
Yeah, so I'm gonna look up the episode, but I heard it on Bigger Pockets. The dude's like, all right, I got too big for real estate properties, and he wanted a higher rate of return, and he got into notes, which they have like 20-some% interest rates on them that you get back.
I wonder if he's talking about, like, I know there's ways that you can buy people's debt.
I think it's something similar to that.
Yeah, that might be what. So like you have a monthly note on a debt, right? That's probably what he's talking about. If I just had to guess.
No, it's like he buys like I guess like a document or something for like $20,000, and it has a rate of return. So you get dividends off of it, and it also increases in value.
That's got to be some kind of debt-based.
I don't know. I was wondering if you knew anything about it.
No, I'll find out. We'll go get us some notes.
Yeah. And another thing, hard money lending, you brought it up, being how the banks are able to give out loans. If you have money stored up, look into being a hard money lender, because you can get interest rates back of like 14 to 16%, which is greater than
if you have your income streams in order. I would agree with that. If you have your income streams in order.
Yeah. I plan on doing it one day when I get that much money.
Oh yeah. No, I wish I could just red pill everybody and show them like, hey, look, you do need money to make money. Whether that money comes in the form of time or that money comes in the form of money, you do need money to make money. And if you want more money, you have to do something with more money, right? That's where the positive feedback loop comes in.
Man, there was another quote you just reminded me.
Gotta get you some sticky notes, man. There's your notes right there. Get you.
I meant to write it down in the book, but I highlighted it. So you said you wanted to close it up real quick, right?
Yeah, let's do it.
All right. This quote I wanted to share. I wanted to close it up with: taxes don't just take your money; it steals your time too, because time is.
Yes. Yes.
You work $4 as an employee. Each hour is so much money being paid to you. Don't let the taxes take your money, because it's also taking your time.
You're dead on, man. You're dead on. Well, yeah, I think that's a great a great way to close it. So, sorry, got hiccups all of a sudden. Bryce, great chat, man.
Yeah,
We're
do
definitely
it
gonna
again
have to.
sometime.
We're definitely gonna have to do it more often. We got to get on some kind of schedule, man. There's a lot of good stuff that we've been talking about, and that's why you guys need to talk to us more if you're watching this. Join up with what we got going on, man. We are on a mission to make wealth available for the average person and to teach people the things that we had to learn the hard way and the things that we're learning, as we're going along on this journey. So,
And if anybody wants a helpful group, we want to create a group, local group, just for small or big entrepreneurs.
Yep.
People
Small
that are
town success, baby.
Yeah, small town success. Subscribe to Kingdom Gold. There's some good content on that YouTube channel, and follow us on
It's fantastic
Facebook.
content, if I have to say so myself. But
Yes, it is.
All right. Well, good chat, man. We'll end it. Good night, everybody. We'll see you all
Take
in the
care,
next one.
Scott.
You too, buddy.
Bye.